Hi, and welcome again to another edition of Market Analysis for today, Monday, October 28th of 2024. I'm Giovanni Benacourt, and this is a recording about an hour and 50 minutes previous to the USA Open. All right, well, last week of October, and we're going to be having next month elections. War elections, earnings, and the Federal Reserve. If it isn't quite the four horsemen of the apocalypse for the stock market, it is still a daunting list of potential problems, and the Fed is the most important. Conflict in the Middle East and the U.S. presidential election will grab the headlines, but investors should focus on fundamentals. The change of an oil price shock from conflict between Israel and Iran seems remote. While it's too tricky to position a portfolio for the result of the election, given the tightness of the race, that leaves earnings and bond yields as the key factors. While big tech reports bear watching this week, the relative underperformance of the Magnificent Seven of leading technology companies since their July peak has lessened their importance. Rising bond yields were responsible for snapping 6-week winning streaks for the S&P 500 and the Dow Jones Industrial Average last week, and will continue to shape market sentiment. Ultimately, that's down to fears of greater inflation after the Fed cut interest rates by 0.5 percentage point in September, leading some to think the central bank is loosening financial conditions too early. The market has priced in a 0.25 point cut at next week's Fed meeting, bringing rates to a range of about 4.5, 4.75. But the question is where rates will bottom out. There is increasing uncertainty over whether the central bank's target will go below 3.75, as economists warn of inflationary pressure from both presidential candidates' spending plans. That means investors should focus on the October jobs report due Friday, includes from earnings reports as to the labor market and inflation. This bull market is still the Fed's to make or break. With that being said, we are at the top range of the NASDAQ as we speak. Obviously, the second resistance level that we have up here is that all-time high. So will we this week fluctuate towards that high as we have opened with a significant gap up today? You see that gap right here? We have opened with that gap. We have rebound off that recession or that resistance level, which is previously marked by a double top from actually the 14th and the 15th of October, so from the middle of the month. And if you take a look at this, the market has really stayed within range of 15 days. This is on the 15th of October, and on that day we had a very deep red candle, and the market basically peaked their head up below this support level, but all of them closed above that, and we have been just within that range. So that tells you one thing, that there is a lot of participation to hold the market around these levels. By the same time, just as there's enough support to sustain the market around these levels, there's also a lot of resistance for the market to have to continue to fluctuate above that, because there really isn't a catalyst to push prices higher. Valuations are coming in, and we are obviously looking for the NASDAQ to come in. But again, the Magnificent Seven have not done their part this time around. So will we fluctuate above that? I'm going to be just, cautiously optimistic, 20,800 perhaps. So let's see. I'm going to say optimistically buying. The S&P. So the S&P actually right now, is also also opening with a smaller gap up. So let's see if it'll fluctuate to 5,900. So again, buying the S&P. The Dow. Okay, so the Dow opened up with a gap up. Let's lower our level of support right around where the 50-day and the Bollinger Band, the lower Bollinger Band have crossed over. So let's just use that area as a possible level of support. And then as for resistance, let's shoot for 43,200-ish as a resistance. So gap up, meaning implying that volatility is rising, going higher. So let's go with the trend, with the consensus. Also, the Russell has gap up. So again, also let's go with that movement. Let's lower our level of resistance to 2240. So buying crude oil. So crude oil opened with a strong gap, with a deep gap down. So on Friday, market fluctuated to the upside. It kind of almost reached 72, and from there it didn't really reach it, but almost. And it but it closed in the green. But with this big old gap down, hey, I'm assuming that the market is going to continue to put pressure lower. So let's just use 65 as our second level of support. And then let's lower our first level of support right to this lower level of the Bollinger Band, which it coincides with this lower wick started from the 1st of October, from the beginning of the month. So let's see if the market will fluctuate towards that low. So I'm gonna go with the direction of that gap. So selling Nat Gas. All right, so Nat Gas had a nice little, well, it actually did open with a little gap down. It is fluctuating to the downside. Let's see if the 50-day moving average has done its job and market has actually started retreating from it. There is obviously a lot of demand for Nat Gas now because of the change of weather. So I'm going to continue to say being long Nat Gas. So you look for reversals on that asset. Then we have here gold. So gold, being a safe haven asset, is going to continue to be that. And with all of this geopolitical uncertainty between Israel and Iran and whatnot, I am speculating that gold will continue to shine and stay above 2,700. And now, obviously, we are making equal highs, equal lows. This is a perfect setup for a breakout. I am favoring a breakout to the upside. So buying gold. Then we have silver that has actually, let's use this double top created last week as our level of resistance, and $33 can still remain as our level of support. We did open with a gap down. It's a very small one. It has been closed, however. So, but I'm still being bullish. So optimistically long buying silver. Let's take a look at copper. So copper continues to be in range, and this is creating a lot. The longer it stays, more pressure obviously is going to accumulate and break up to either side. I am favoring to the upside. So buying copper, being ready to buy copper. All right, so Bitcoin. So Bitcoin right now is fluctuating above our level of resistance that we have here, $70. I'm gonna use that puppy as my now resistance, 71,000. Well, actually, I'm gonna use the upper Bollinger Band stream as my resistance, and 70,000 is going to be my first level of resistance. And then I'm going to sustain that level of support, which is sitting right at the 20-day moving average, which is the medium of the Bollinger Bands, as my first level of support. And then that 50-day moving average as my second level of support. So, yep, obviously going long, buying the Bitcoin. Then we have the Euro, which is also creating equal highs, equal lows. A great setup again for a possible breakout. We have the 200-day moving average above the market as our second level of support, and then we have that first level of support right around above the 108 marker. So let's keep those puppies, and I'm gonna continue to be just on the sidelines with the currencies because they could just move in either direction. Then we have the pound. So the pound is looking to move to the upside, it did had up open with a small gap up. So it is showing us that momentum to the upside. So let's go with that direction to the upside. Then the dollar index will have a lot to say. It did open with a gap up, but it has been closed, but it continued to move lower. So perhaps this today, it will just trade sideways, and that'll just obviously not put pressure into the metals or the currencies. Well, that's it for me today. Have a great trading day, and I'll see you tomorrow.